Hello, welcome to Accounting Discussions. Here we will see the preparation of financial statement. This is a preparation of financial statement series. So we'll take one by one exercise to understand the different ways of preparing the financial statements. In this example, at the beginning of the business, the first financial statements will be prepared based on these financial transactions. So the balance sheet, income statement, cash flow statement are given. Started business with cash. So you have received the money, capital 50,000, and that is not an income but a source. Capital 50,000. Avail loan, avail 6% loan. Another is also a receipt, but not an income, but a source. So loan 100,000. Purchase stock of goods, purchase plant costing 40,000, and you paid money for that. So 40,000 is the plant, and plant is an acquisition of asset. So asset will be shown on the balance sheet. Still now we have not made any expense or neither received any income. Purchase stock of goods. So stock of goods 80,000, a payment, and stock is an asset as on this date, will become an expense only when it is sold. Sold 60% of the goods for 150,000. So now this is a sales, 150,000 for cash. So sales is 150,000, and whenever there is a sales, there has to be cost of goods sold according to the matching principle. So the cost of goods sold is 60% of the stock, 0.60. As a result, the stock will come down to the extent of the goods sold. As a result, the stock will come down to the extent of the goods sold. You can see that the stock has reduced to the extent of so stock was there 80,000, stock reduced to the extent of 48,000. Then expenses for the period is 20,000 expenses for the period, but only 60% of the expense has been paid. So 60% of 20,000, 0.60. So the balance will remain as an outstanding expense, and outstanding expense is 20,000 minus 12,000. Depreciation on the plant. Depreciation is an expense, and depreciation on the plant is 20%, so 0.20 of 40,000, and depreciation is not an outflow but a reduction in the value of the plant. So therefore the plant will be reduced to the extent of 8,000, will be shown as accumulated depreciation. No other information given, but interest has to be shown because of the accrual principle. So interest is 6%, 0.06, and let us assume that you pay the interest. So interest is an expense, an outflow of money. If interest will not be paid, will appear as an outstanding interest on the balance sheet. Now we can find the profit. So profit is equal to the incomes minus expenses. So PBT. So PBT is equal to 150 minus 82,000, and we'll calculate the tax on it. So 0.30 tax is 0.30 and we pay the tax. So tax is an expense, an outflow of cash. And the PAT, profit after tax, is a PBT minus the tax. So PBT in this case is 47,600. If no information given, the entire profit is assumed to be retained. So let us retain the profit because it has not been distributed. So the entire profit has been retained. Then we can find the cash in hand. Cash in hand is equal to cash available minus the cash payments. So in this case, cash in hand is 300,000 minus 154,000, and cash in hand will be an asset shown on the balance sheet. So the two important items on the balance sheet, that is the retained profit and the cash in hand, comes from the income statement and the cash flow statement respectively. That also shows the interrelationship between the cash flow statement, income statement and the balance sheet. In the process, we have also balanced the balance sheet. So most of the items are dependent on are interdependent. We can see the cash outstanding expense. The expense is more than the payment. So there is an outstanding expense as a liability. Similarly, accumulated depreciation is an expense but not an outflow, but is a reduction in the value of the plant. Stock is a stock purchase minus the COGS is the stock available on the balance sheet. And outstanding expenses we have already seen. The retained profit, if the profit is not distributed, profit will remain on the balance sheet as a source. So therefore, the balance sheet, income statement and cash flow statement together captures all the business transaction, and is possible to understand the business decisions by seeing the financial statements. Thank you very much.